Alright traders, George here, and an update for you on the S&P. Here's a snapshot from the last video I did when we were trading just sub 1700 here, and main upside targets that I had you focus on were 1738 to 46, 1773 to 77, with a nod to 1755. Okay, so two big ratio confluence areas for the areas in green, another one at 1755, and then another one up here at 1798 to 1808. And then looking for closes below 1674 as a sign of weakness to the current bull run that we've been in. So that's the graphic I left you with last video. Here's where we are now. Onto the DSR model here on a 60-minute chart. A couple key things to take away. Get your eye to look over here to the left to start out with. When I left you with that last video, we were trading just sub 1700. We went on obviously to make new all-time highs in the S&P, and when we got over 1700, those areas that I said to focus on, we've actually tagged all three of those zones. Having never been there, the resonance with the traders at those areas is really critical to see. This impulse here, which was very strong in the S&P, taking us from the 17 teens up to the upper 30s, lower 40s here, that was the lower green target zone that I had. And here we essentially were parked at 1738, getting into the low 40s off of that real big impulse up. Our next impulse up took us to 1755, and that's where we had a significant resistance swing put in. Traders resonated up to target 1, traders resonated at target 2, traders resonated at target 3, which is the mid-1770s here, with the initial strong sell-off and an outside return testing that same zone again, and yet resonating again with another strong sell-off. So here's where we are right now. We're at 1763 quarter. Essentially 1800 is the top here for that one segment, but I am going to add 1811 and 1857.50 to upside targets based on what we've seen in the market since the last video. Within the DSR structure here, a couple key takeaways. We're at 63s right now. Here's some DSR levels here coming in at about 1745, and below that at about 1735. So these would be two zones to watch for support if we pull back from where we are, and monitor the close below those areas if the bears can make this a little bit more of a correction here. Certainly closing below 1735 puts us on alert. Here are some areas below, the initial ones to watch: 1724, 1690, and 1640. Now I've got 1684 here in black as a trigger point, because if we close below 1684, that's going to put a lot more pressure on the bulls to sustain the recent rally, and we're very likely to be moving down further than just making a quick pop there at 1684. So something to watch if we happen to get down there. Those are the upside targets beyond where we've been, and then we'll note that we've got solid DSR resistance up here in the upper mid-1770s, and we'll see if the bulls can pop the top there. They don't need to go much further to make new all-time highs yet again. If it acts as resistance yet again, will 1745 hold? That's question number one, 1735s, and then what I just showed you down here. So that's what I'm looking at in the S&P. There's your update. I'll see you back in the live room.